Good morning, traders. This is day number 7 of the small cap market open test trading. What does that mean? We are trading small cap stocks with one single share with real money until we've collected 100 trades worth of data to find out whether this system is profitable or not. And then at that point, we can consider increasing our position size. So first, let me show you the screener that I use to pick these stocks every day. So I go over to my screeners, I click on small cap, click these 3 little buttons. It's really important. I'll show you why in just a moment. Click those 3 buttons and click modify, otherwise the filters will not be applied. Then I organize the list by volume. And let's go to another screener and I'll show you what the problem is if you don't click those 3 dots and click modify. Let's say I want to switch over to my mid-cap screener and see what's going on in the mid-cap market. I click on the mid-cap screener. It looks like things changed. Well, some things did change, but is it really applying my filters properly? One way to test is to organize the list by price, because you can see on the mid caps, I have the price range from $5 to $50. If I go to price, it should just show stocks $50 or lower, but it's not showing $100 or lower. That's because that's my small cap criteria. So if I wanted the mid cap screener to actually work or use the filters from the mid cap screener, I have to click those 3 dots, click modify. Now you can see that it's showing me stocks in the correct price range. So let's go back to that small cap screener. Again, clicking modify. And I organize the list by volume once I have those filters applied. And I'm only interested in the stocks with the highest volume and highest relative volume. So this is the day's volume, and then this is the average volume over the past 3 months. And I'd rather see the day's volume be higher or much higher than the average volume. Then the other thing, they must be trading with 500,000 shares or more right at the open. It's a lot later right now, so you're seeing a lot more volume. And the percent change must be 5% or more. So let's take a look at the video and you can see what I traded this morning. So AEHR was the #1 stock on the list in the morning as well at the open. So once I've checked the daily chart and showed that it is trading above the 200 MA on the daily chart, then I can mark out the previous session high, which I'm doing right here. That's what that yellow line is. If the stock has made a high during the pre-market, aftermarket, or previous day, that is the level that I want to mark, and I want to see that level broken in order to indicate strength in the stock, or at least possible strength. I'll show you what I mean by that in just a moment. So let's keep watching here. Let's go to right before I took my first trade. So here you can see that I have that previous high marked out. It has not broken it yet. I even set an alert. That way I can walk away and come back if it did. And then it finally gets broken. I just bring this up on one single chart because there was nothing else really to watch that day, or today, I should say. And let's take a look at these different levels. So this is the previous high I mentioned earlier. And then I'm waiting for the high of day to be established, which it was on this candle. Now the price is going to pull back, and then I need to see a new high of day established, and then on that pullback from that new high of day, that's where my entry is, and that's just based on the plan that I'm testing. That's all written in this trading plan. So it took quite a while for a new high of day to be broken, but look what happened over here. And this is extremely difficult to predict. If you're a new trader, you're probably going to see this and, oh, well, why didn't you get in here and, ride this huge move to the upside? It's nearly impossible to predict when these moves are going to happen. So you can see here that after this pullback, there was one false breakout here. There was another false breakout here, another false breakout here. You would have been stopped out on all of those trades. Another one here, you would have been stopped out around this area. And another one here as well. So there's so many false breakouts, so it's impossible. You would have already lost a ton of trades by the time you got in on this move. So just pointing that out, that it's very difficult to predict when these moves are going to happen. So I'd rather have a very easy kind of criteria to follow, and then I just test it 100 times. And if it's profitable, it's profitable. It doesn't matter if it's something that other traders use or not. So let's take a look. So here's that big move that I was talking about. That's, like I said, impossible. Why didn't that happen back here? And you can look back and say, well, it hit a support level. Well, there's a support level right here in this area, and it broke right down through that. There's a support level in this area. It broke down through that. And then finally, once it came down and tapped this support area, that's when it turned around. So again, there's really no rhyme or reason sometimes as to why these things turn around. A lot of people look at volume too, and you can see the volume ramping down here in the red, but then you get a fake breakout there. So again, there is really not an easy way to tell when this stuff is going to happen. So I'm just using this easy criteria where extreme levels are broken. Whenever an extreme level is broken, that is a strong indication that things could continue in that direction. So that is how this system works. So let's take a look at the first trade. I'm sorry, trying just to get to right where the entry happens. So here we go. So it's going to be for the break of this candle. You can see I'm hovering over it right now. The high is 1608. So as soon as I see 1609 or better, here it comes. Look at this bubble. There's 1610. I trigger my hotkeys. I get filled at 1614. Now this is extremely crucial. No matter what system you're trading, move your stop loss in place right away. I have my hotkeys set up so that it throws out a stop loss at 10% below my position and a profit target at 20% above. That way they don't get triggered accidentally if the price is very volatile, but you have to remember to move that stop loss in place right away. Why? Look what just happened. The price can turn around very quickly and stop you out. So you want to make sure that you get stopped out where you want to get stopped out and not much lower, or you get stuck holding a bag because this thing turns around and just heads down and now you don't know what to do. You're afraid of taking a big loss. These are all things that can be avoided by using a hard stop and also a strategy that tells you exactly where to place your stops. So let's keep moving on. So the next entry that I have to take is when a 1 minute candle makes a new high. So it's as soon as this level is broken or this candle high is broken. So it's 1604. I need to see 1605 or more. It's going to happen here in just a moment. Just keep your eye on this price bubble. It's just a few seconds away. So here's $16. 1602, 1605, there we go. And now I've hit my hotkeys. I'm in 1607. That is not a lot of slippage for a stock of this price and volatility. Again, move that stop loss up in place. Even if you're not sure exactly where it needs to be, just get it around that area and then you can adjust it later. So I always hover over the candle, find out the low, and then place it just below that level. So I input the wrong stop loss price here, but it didn't make a difference in the long run on this trade. It was just an error on my part while I was in the trade. I didn't even realize I did it until I was watching this playback. And let's see what happened on this trade. This is trade number 2. I'm allowed to take up to 3 trades per day. If I get stopped out of all 3 trades, I stop trading. If any of the 3 trades hit my 2-hour profit target, I also stop trading. All right, so there, look at this. This is actually pretty interesting. So this thing was chopping around a lot. It was looking weak, and then all of a sudden it reverses. It starts to shoot up here in just a matter of seconds on this candle. Actually, it's still chopping around, but this is the candle that it takes off on. Again, very difficult to predict how these moves happen and when they're going to happen. So the only thing you can do is come up with a criteria, that you can assume for some reason or another may be profitable in the long run, and start trading that criteria, start trading that setup, and track the data. And after 100 trades or more, you'll know whether or not it really is profitable. So you can see this thing got 20 cents away from my profit target. So that's quite a strong move. And then what does it do on the exact same candle? Reverses all the way back down and stops me out. So again, very unpredictable price action. This is really kind of what small caps are known for, is this volatility and unpredictability. So it's extremely important that when you're trading these small caps or any stock that is moving with a lot of volatility, that you use hard stops and you don't move them. You just set them in place where they should be and leave them alone, because you never know when things are going to turn around and head back the other direction, and they do so very quickly. So let's take a look at the next trade. So this will be the third and final trade no matter what happens. And if you're a new trader, trades like this can be extremely frustrating and can tempt you to break your plan, can tempt you to hold and hope, those kinds of things. Really a bad idea to do that. When I was a new trader, I got into a period where I was just kind of doing anything, kind of breaking my rules, doing random trades. I actually ended up with a 13-day green streak, breaking my rules, which all that does is enforce bad habits. and leads always to a big red day. And that's exactly what happened after 13 days of nothing but green days. I ended up on the 14th day holding and hoping a terrible trade, and ended up closing it out after holding it over the weekend, and it ended up wiping out all of my green days, that entire 13-day green streak. And that serves me right, because I broke my plan, and I was breaking my plan up until that point. So that was a huge lesson that I learned. That was only a few months into my trading. I've been trading for over a year and a half now, so I've developed a lot of discipline in that time. I have never blown up an account. I was in the red overall for a long time. I now am in the green. And I attribute that mostly to just the discipline and following a plan. You can have a profitable trading plan, but if you don't have the discipline to follow it, you're not going to be profitable. And the hardest days to follow it are days like this, when these good setups fail, when you do everything right, yet the trades don't work out. But you have to know that that is going to happen, and it's probably going to happen more often than not. And that's why you need a risk management system that allows you to lose more trades than you win and still be profitable. And that's what we're doing here. So there's the third trade. I lost that trade. I'm all done for the day. Yes, it is a little bit frustrating, but again, you cannot let it get to you. And the best thing to do is just follow your plan and stick to your rules and stop trading at that point. So with this risk management, all I need is really 1.5 more winning trades. It sounds weird, but it's because we're trading 2-to-1 all or nothing. So after the next 2 trades, I will have not only made up for this day, but I'll be up 1R. But we've made 14 trades so far since we started trading this plan just last week. And I'm going to go over all of those results in detail on a video that I'm going to release Sunday morning. So check that out. I think you'll be interested in the results so far. So we'll see you then. I'm also going to release a video tomorrow morning about a swing trade with SPXL, so you might want to check that out if you're interested in swing trading. As always, go into every single trade with a plan. Stick to that plan no matter what. Otherwise, you don't even know if what you're doing is going to be working in the long run. And then always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.